Okay, welcome back everyone. Let's get right into the stock market technical analysis. Took a couple days off during the holidays. It was really low volume and there just wasn't a whole lot to report in terms of a video. Again, in the private member group, I did give out a trade idea on Friday. There was a sell signal on the triple Qs. Posted that out for the private member group, and so far that's working nicely, down 1.7% just today with that gap down. So if you guys are interested in joining the private member group and getting additional trade ideas, guys, I'm not going to be out there every single day, every single hour of the day posting stuff. I really try to post those key setups, really good trade ideas that I think are going to work because they're technically set up, or I'll give you guys technical setups in that private member group. Link in the description below on that one. Okay, so triple Qs, guys, we'll just get into the charts and see how things are looking to start off the year. We're obviously coming into the year with relatively heavy selling. This is mostly due to the fact that people were holding off on selling positions for the tax purposes, and we're seeing kind of that initial selling pressure today. So we'll see if that actually continues. On triple Qs, a couple things that I'm noticing. Obviously, we've got really negative divergence that just you really could say it's extended. We've got a short term. If I look right here, that's divergence as you were kind of grinding higher during the holidays on diverging momentum. And then obviously something to look at here, you've got support, and then you basically start to crack that on Friday and gapping down today to help confirm that breakdown. So I think we're going down to about 392.30-ish, 392. There seems to be some support right there. And that's the short-term level of support. I think there's possibly a lot more downside, but we'll kind of adjust as the time goes on. We do have big divergence. Look at the PPO right here. You can see here, I've got it kind of marked out. This is just an extension of divergence. You have your former high right here, and momentum just continues to kind of make lower highs, and we've clearly, just kind of ramped up with really low volume, actually, over the last couple months, basically. But just kind of this grind, especially over the holiday trade, it was just this grinding higher, 0.3% or so higher every day on pretty low volume. But it's a divergent high. So that's the key takeaway. We've got another divergent high on triple Qs. We do have a sell signal. We started that on Friday as we broke this trend line here, and then we're obviously gapping down today. So we have a sell signal with divergence. I think there's more downside. It's sell to rip, at least for the short term. If I go to the weekly chart, this is basically, and I've got a lot of lines and everything, but if I roll out on the weekly, the former high on the weekly chart was right here back in November of 2021, and you can see we basically just traded pretty much right into that former high with that negative divergence. So that's a double top. And then also on the weekly, you can see here, there's that divergence that really stands out to me on the weekly chart on the RSI and the PPO right there. So weekly divergence obviously can take a while to play out. It doesn't indicate necessarily you're going down now. You need to see that sell signal. But if you look at the weekly chart here, we do have the sell signal as of today. Of course, on the weekly chart, we need to see how the week closes out. So that's really key there. We have to wait till Friday to see if we have a weekly sell signal. A weekly sell signal would likely indicate that we've started the next tradable trend lower. Which, from my perspective, looks like this is a double top, and it could be something all the way down to that 238 number that we've talked about for quite a while. Okay, so that's something to look at there. One thing to point out, if I go back and look at the last inflationary period, which is back in the 1970s, the decade of the 1970s, kind of have to roll back quite a ways to see it. And I need to use the SPX because the SPY didn't exist back then. But here it is right here. You can see the 1970s. We had really, this was your last inflationary period. You can see you had kind of a leg down. Then you ran up and made a new high followed by a lower low and really just chopping sideways. This is sideways price action with, two good, really bear markets within that period. And this is about a 10-year time frame. So if anything repeats, and nothing says that it has to repeat, but if it does, then, we're kind of in, potentially like this area. And doesn't mean we can't go higher. Maybe we've hit the high, but we're kind of in this area. So objective, it doesn't make sense to be long here. From my perspective, it doesn't make sense to be adding new longs, and especially with the most recent sell signals. Now again, that's the 1970s, so we can go back to today. Here's the S&P 500, the SPY on the weekly chart. And you'll see basically that this is their former high. We didn't quite get there. We stopped just a little bit short. My trend line's kind of in the way, but right there, just slightly short on the weekly. So maybe we've got another bounce this week, maybe not. But oftentimes when there's kind of a key level, which would be that former high, the sellers will step in early. So keep an eye on that. Let's go down to the daily on the SPY. You'll see on the daily, here is this uptrend line that we started back in October. Support, did get a breakdown there, and then over the holiday trading, it was just kind of grinding below back testing. All right, and starting to sell today. I don't see anything really telling on this chart. It doesn't look quite as clean as triple Qs, so that's something to take note of. And flipping over to the heat map, the S&P 500 heat map, you can see pretty much today's selling is all in the tech sector. It's FANGs, it's semiconductors, it's pretty much all tech. Healthcare, which is defensive stocks, looks they're catching a bid. So most of the selling is taking place in those large cap tech and kind of those high flying semiconductors. Probably a lot of it, because those were obviously the best performing areas last year, is profit taking. People are locking in profits that they didn't want to sell last year. They want to sell it this year. So makes sense to see profit taking. And it's just one day, so we can't confirm that that's basically going to continue. Okay, so let's look at these Mag 7s. Apple getting smacked down today, down 3.5%. So big profit taking today. The thing that actually is interesting, here's your former high in Apple back in July, right there. And we just recently, over the holiday trading, kind of broke out to make a new high, but it came with negative divergence. It was slight divergence, not super steep, but it's right there. You can see momentum moving lower as price was moving higher. Started to lose steam into the close out of the holiday trading, and then today just a big smackdown, really wiping out gains. All this price action is being wiped out, going all the way back to mid-November. So 6 weeks of price action pretty much wiped out in one day on Apple. That's relatively telling for kind of a bear market. So we'll continue to watch this. But that's obviously a big move. Nvidia, this one is right at support, so we need to see this one break. In order for the kind of the mania, those momentum stocks, AI stocks, Nvidia needs to break trend. Here is a very clean chart too. On Nvidia daily chart, you've got support. All right, didn't quite hit it there, but there we are right there, sitting right at support now. So there's no sell signal. We do have negative divergence that's really been building since about June. As momentum has continued to drop off, and we are sitting right there at support. So I suspect personally this one's going to trap a lot of bulls. You've got this also what looks to be, let me kind of adjust this sideways price action right here. Here's kind of the highs right there, and then you've got this sideways range, which is right there. The stock's really gone nowhere. For about 6 months or so. It's really just been kind of trading in waves sideways. So I can imagine that we could probably just gap down, maybe even below this trading range on some sort of a news event. In general, there's no sell signal, so it doesn't tell me to short it quite yet, but they're probably not going to give you the cleanest entry on this one. So you could obviously, it's higher risk if you were going to short it here, because all we have is divergence. We don't have a breakdown of trendline support. So any position would, if I was going to take a position, I'm not exactly sold if I'm going to or not, but if I was going to, that would be a starting short position. Because again, I don't have those sell signals. Microsoft, I don't see any sell signals. Again, kind of sitting at support here on Microsoft. Negative divergence is in play. All right, we do have that, especially right here. You can see momentum dropping off, but again, no real sell signals. So Meta has big negative divergence that's been building. I can even kind of adjust that, but there's the divergence. Momentum has been going lower and lower, and these are divergent highs. That's a divergent high. That's a divergent high. This one, you probably have some support right about there, and you can see hasn't broken support. Still sitting on support there. So no real sell signal on this one either. So we do need to kind of wait for that one. And same picture, Google, again, negative divergence on the daily chart. It's been building. This one's kind of sitting at support right here. No real sell signal either. So in general, I mean, I don't see big sell signals. Apple's probably the worst looking chart. The rest of them kind of look like they're hanging in there with, they're down, substantial, but technically they haven't broken some support. So again, it's not an all-in short by any means. We definitely need to see some of these other things start to trigger those sell signals. Triple Qs isn't going to go much lower without additional sell signals from these other Mag 7 stocks. Interest rates, 10-year Treasury yield spiking today, but nothing's technically really changed. We're still kind of in a downtrend right now on interest rates. You can see there's the downtrend on the daily chart. I don't see any bullish divergence on the daily chart indicating that there's anything changed. So coming into resistance. So again, technically nothing's really changed, and we could have another leg lower in interest rates. That's not necessarily bullish though. Again, falling interest rates have been bullish in the short term, but typically if you go back and look at how interest rates behave, usually interest rates fall as the market is in recession, enters recession, and stocks don't typically do good in recession. When earnings really fall off because consumer spending drops and you enter recession, stocks don't do well. So that doesn't necessarily, bonds aren't going to necessarily tell us as interest rates fall that stocks are going to do well. We could see interest rates fall as well as stocks falling. And then gold, I'm kind of looking through gold. I mean, GDX, nothing's technically changed today. It's still above the 200-day moving average. It looks to be in an uptrend. All right, I've got 2 reactions here. I don't have 3 though, so we do need to kind of wait for a little more proof of this uptrend. I'm not completely sold on the gold trade right now. When I look at Newmont, it still looks okay. You did have this big bullish falling wedge here with bullish divergence. You broke out, you back tested, and you're moving higher. So I think the measured target still is higher, up to about 46.06, up to potentially 49.70 or so. That one still looks good. So if that's going to continue higher, then you should see the rest of the gold stocks go up as well. All right, trade ideas that also look interesting. MasterCard, you have negative divergence. It's been here for a little while. It's pretty shallow because, again, the trading over the holidays was really low volume. But negative divergence, you have an uptrend line to kind of keep an eye on. And we, as of today, have a breakdown and a sell signal. So that would indicate we're going lower, likely just coming down. And then you want to line that usually with Visa too. Visa has been really going nowhere. It's not going up. It's not going down. On Visa, you've got this bearish rising wedge, really well-defined wedge. You had a breakdown and a backtest, right? And then it's just basically been backtesting for, about a month or so. And so, yeah, grinding higher, I would say, kind of a slight float, up 1.5% or so over a month. But in general, that can get taken out easily in 1 hour of trading, basically, let alone a day or so. So in general, this looks to me like it backtested. That I would assume as of right now that's about the top. So you could backtest again, I guess, but to me that looks like the top right there, and we're likely heading lower. So keep an eye on that one. The measured target for this one has never been hit on this bearish rising wedge pattern, and that's the widest part of the wedge. You take it from the point to where it broke down, and the measured target is all the way down there at 204. So the short trade would tell me that there's roughly 20% downside, and then maybe we backtest a little bit more, and so we could run up, and that'd be about a 2 to 3% upside. So the risk reward is very favorable. Obviously, we need to see some of these other trades align, especially the triple Qs, in order for this one to work. And then JP Morgan would help. JP Morgan, I don't see, it's back testing. You have kind of the similar setup here. Let me kind of show you guys. You've got this bearish rising wedge, all right, nice clean bearish rising wedge. You have a breakdown. It didn't really impulsively sell down, just kind of went sideways. But then just a straight march up for a back test here. So that's, that is resistance. I don't have negative divergence on this one, telling me that, it's just not as clean. The momentum's still there. So it might need to kind of sell down and then do another back test and diverge. You don't have to have negative divergence, but it's nice to see it. It helps, helps make the argument for the trade. I know I covered Nvidia, but here's the semiconductor sector. You're right at support. All right, there it is, and sitting there right at support. So there is negative divergence on the RSI. I don't really see it on the PPO. We do have it here though. There's a larger divergence at play right there on the PPO, and the RSI. So we do have negative divergence, and we're sitting right at support. So we need to see this break to trigger the sell signal in the semiconductors. Again, we don't have that sell signal yet, so we'll just wait for that one. Wheat getting knocked down today. Again, wheat's just kind of recently it's been kind of a dead money trade. It's not really going down. It's not really going up. We're just consolidating in this kind of building a base, and so that's continues. There's no change there. I mean, if I look at the futures, let me check the futures. You always want to align with the futures. Yeah, again, just kind of looks like we're just kind of hanging out below the 200. We don't have any negative divergence. We've got downward momentum right now, but we didn't make a new high in price. So to me, it tells me that pull back a little more and just continue to kind of grind higher or march higher eventually. Home builders, they've been skyrocketing. I'm just looking at a couple of these home builders. Here's PHM, uptrend line here. Not really a negative divergence in play there on the daily chart when I really look at it. So it's a little, it's not the cleanest setup. You did break. You do have a sell signal right now, but it's not that impulsive. I don't really like that. I'd like to see a stronger selling, stronger and more impulsive selling. That doesn't look like it to me. And I look at like Toll Brothers, very similar chart, uptrend line. You're below the trend line now, but again, not impulsive. Seems like there was some buyers there, and it's just not throwing the towel selling. So yeah, it looks like they're still probably going to hold up for today. Okay, that's pretty much all I have. So I'm just continuing to kind of scan. In general, it's the first day of the year, so you're going to see some selling. It's not anything I'm super excited about yet. We do have some signs that there's going to be some continued selling. I do think it's probably in sell to rip, at least in the triple Qs, for a little more downside. But again, that sell signal was pointed out to the private member group on Friday. So now that we're already gapping down today, it's not as objective to just jump into a short. But we do need to see some signs of breakdown. So watch the semiconductors, watch Nvidia. Those are going to be kind of key tells for us to see if we're going to have some continued selling. Because right now those semis are sitting at support. Some of those mega big cap tech stocks are sitting at support. So we need to see those supports break for continued selling in the next sell signal. All right, I'm going to wrap it up there. Guys, drop me a thumbs up on your way out, and best of luck.